Hello traders and welcome to another video review. Today is Thursday 27th of May 2021. Let's take a look at the Forex calendar. No important data had been published overnight, and during the London session, as you can see, there isn't much from the data side today. We got speeches from the MPC member at 12 o'clock, and that's about it. And 1 o'clock, European Central Bank Weidmann will give a speech as well. A little bit later, during the New York session, we have unemployment claims, continuing claims, GDP and GDP price index, durable goods orders scheduled for release 1:30, and then at 3 o'clock pending home sales, and 3:30 natural gas storage change. So as you can see, the GDP from the first quarter of in the US might be kind of interesting to see data. The market expects 6.5%, which is better than 6.4% last quarter. Durable good orders should rise from 0.5% to 0.8% month to month, and the unemployment claims should decrease from 444,000 to 427,000. So I think we should today speak about US indices and the US related pairs during the analysis. So let's start with the US dollar to the Canadian dollar. We didn't see this one for some time, and what do we have here? We are out of the channel. We made a new low at the level of 1.2011. Since then, we have been trading inside of the narrow consolidation between 2011 and 2150, and as you can see, the key technical resistance located at 2244 pips hadn't been hit yet, so this is still a target for boost. The momentum is slowly going up, but this is a very slow movement from the oversold levels. Right now we are on the level of 40.41. Still we got some distance in order to hit the level of 50. I guess that the level of 50 would be around the test of 1.2244 pips. So this is still the situation. In the short term, we need to get out of this range above the 2.2143, 2.2150, and right towards 1.2244. The longer term trend, and the longer term trend is still down, and there is no indication of trend reversal. We just consolidating sideways, doing nothing on the US dollar. USD index is not better, I guess, than the US dollar to the Canadian dollar. As you can see, we are still consolidating inside of this channel. Recently we just been rejected from the upper channel line around the level of 90.15. so right now we might accelerate lower towards, of course, the target for the wave, wave 3. So please pay attention to this wave. We are still planning to hit the lows of the 2021, which is the beginning of the wave A, from the beginning of the January at 89.15. So please keep an eye on this level. On the other hand, the road towards higher levels is open when the level of 90.38 is violated, and the level of 91.41, which is the high of the wave B, is completely violated as well. Let's take a look at the SP500 index. what is going on here. As you can see, we are back in the zone, which is very very familiar to us. I mean, we dipped here, we dipped again, but now we are back above 4,187, made a new local high at 4,213. So we are heading towards all-time high at 4,238, and then the target is 4,270. So the outlook hasn't changed for the S&P 500 at all. We just dipped briefly inside of this main channel territory, but still are trading higher, of course, in order to let's see how much was this deep correction. It was only 4.82% in order to count this as a different cycle. We need to dip more than 5. Let me just adjust the data. 5.92%. So that's 1.1% more we need in order to make the overbalance, price and time overbalance. So far only a pullback, a sharp one. However, bounced back up. The price is still going higher. Nothing changes here. Let's take a look at the Dow Jones Industrial Average. Situation is kind of a similar here, but we have a very interesting candle here. Look at that. We have this candle. This is very we can get rid of this channel. This candle here is a shooting star candle on a daily time frame chart, just above 100% of the Fibonacci extension. So right now we can just remove this one, and of course we can put the resistance level at the top of this candlestick. 35,079 points. Apparently this is 55,087 points. Let me just be more precise. 55,087 points. There you go. This is the top. Since then, of course, we have a pullback, bounce, pullback, bounce, but right now we are not trading that. We are not trading that high as in case of S&P 500. Yes, the market fights the level of around 34,450. I think this will be the correct level here. There you go. Market fights this this level, and right now it both are losing the fight. And how deep was the recent pullback? Let me just take a look here. It looks like the pullback was kind of a deep one, even around 5.3%, which is officially the biggest correction during the move from the end of the October 1st, yes, end of the October, beginning of the November 2020, which is a very interesting thing, because that would mean we might start a new corrective cycle to the downside. Let me just move this channel. Okay, let's leave it like that. We can say that this is the bounce, test and new high. So because we have a new data, we just, there you go, we will adjust our chart to the highs. And right now let me just put some middle line inside of this channel. Middle line. Okay, that's all right. I found that there will be some kind of a middle line in here, but it looks like, yes, there you go, it's a middle line. Yeah, so the market is trading in the upper zone of the channel, bounced from the middle line, bounced again, so it definitely doesn't want to go lower. Right now our previous pullback percentage markers are no longer needed, and of course what we are seeing right now is a bullish attempt to rally higher towards this pin bar shooting star highs. Okay, so this is the 5.13, doesn't matter, it's still the biggest correction. So right now this is the technical resistance. We have some other zones here, but they doesn't actually work anymore. We might only work with the levels of 30,000, 53,605, which is the technical support, because it's being recognized, and we will add a new one, which is of course at the lows of the recent move to the downside, 33,290. So this is pretty nice zone, in line with lines of a free technical support, but below 33,000, which is apparently no longer needed. Below it should be this, I guess it should be this high. This is the market wanted to go somewhere around this 53,230. If we are below this level, then there is a nice road towards 32,143, which is the actual technical support that would change the outlook for the next weeks. Momentum is still positive, but please notice how we bounce from 45 and 47 points, and if we put our line over 50 here, we can see that the momentum is kind of going closer to the neutral level. Neutral level will be somewhere around the middle line here, the middle line, and the level of 33,605. So any violation of this level might trigger another sell-off, and RSI will break below the level of 50 towards the negative territory that hasn't been seen since beginning of the March 2021. Besides, of course, the recent dips, right? Besides the recent correction, because it's the biggest one. So please keep an eye on the Dow Jones Industrial Average. It might give us a clue to the next possible market, of course, market scenario. I will just put my blue arrow here, so you can see that this is the key technical support level, 33,605 or 33,230. Of course, any violation and we are going way lower. So that's my analysis basically of American indices and the US dollar. Thank you very much for watching, and I hope I see you guys soon. Bye bye.